You are going to rock the year. And we're going to help you do that here at the Elite Recruiter Podcast. We have the Rock the Year event, the Recruiting Growth Summit, kicking off on March 10th. It is going to be awesome. We're going to be focusing on mindset. We're going to be focusing on sourcing. We're going to be focusing on AI. We're going to be focusing on operations and high performance and BD and sales. Every single thing that you need as a recruiter to make sure that you can rock 2025 and make it the year of abundance. Make it the year that works for you. Make it the year that you crush every single one of your dreams. Let's go get it. Coming up on this episode of the Elite Recruiter Podcast.
I've worked with hundreds of business owners, and you can tell pretty quickly which owners that will become successful and which ones will not. And it is a mindset. It's who's listening and who's willing to make changes. At the end of the day, your business should do two things for you: earn income, which is your pay, your drop, but create wealth, which is what we talked about on the sales side. So what do we do with that business to create more income? And then the other thing is, how do you create that wealth? And creating that wealth is you have to grow. That's the only way you increase that wealth.
Welcome to the Elite Recruiter Podcast with your host, Benjamin Mena, where we focus on what it takes to win in the recruiting game. We cover it all from sales, marketing, mindset, money, leadership, and placements.
As a recruiter, we are two guarantees of things that we're going to have to deal with in life: death and taxes. And we're not talking about the first one. We are here today to talk about taxes. I have a tax specialist with us to talk about everything that you should be doing when it comes to your money, everything that you should think about be doing, and probably the things that you're doing wrong. And secondly, we're going to talk about some things like, what is the financials of the business, the accounting of the business? What is your business even worth? If you're looking at selling, like, what do you, like, all of these sort of things. So, man, I am so excited about this episode. And for those that are listening, we're going to make tax and accounting fun today, especially for the recruiters out there. So welcome, Michael.
Thank you. I appreciate it.
All right. So Michael, real quick, before we do a deep dive in, a whole laundry list of things I want to cover, or a whole spreadsheet of things I want to cover, tell us a little bit about yourself.
So I'm going to make accounting fun again. That's going to be our theme today. So pleasure to be here. My name is Michael Napolitano. I am a partner at the accounting and consulting firm Citrin Cooperman. We are a national firm. I have the pleasure of working with over 200 staffing firm and executive recruiting firms. So I've been in this space for almost 12 years. I joke, I'm not just an accountant, I'm a psychiatrist. So my clients can pull up a chair and I can listen to them and hopefully provide some good guidance for them.
Okay, let me ask you this. Accounting. There are 10 billion different things and routes you could have gone with accounting. Why did you end up working with us wonderful recruiters?
So rewind 2010, I was a partner here at Citrin Cooperman. And one of my partners came to me and said, "Hey, you have a good personality. You're high energy. We need someone to take over our staffing practice in New Jersey. Tag, you're it." So I wasn't looking for it. So it kind of found me. And it's been an incredible run because I love working with the high energy, sales oriented clients.
So pretty much recruiting got you the same way it got everybody else.
I fell into it. I wasn't looking for it. It kind of hit me in the head and I was told, "Tag, you're it." And when you're a young partner, you say, "Yes, sir, I will take that."
All right. So before we start talking about the things that you need to start thinking about when you're growing, I got to start off. What is the dumbest thing that you have ever seen a recruiter try to write off?
So typically it's cars, very fancy, expensive cars, and travel, vacations, lots of vacations. We've also had boyfriends and girlfriends. We see it all. That's why we love what we do. We get a taste of everything. So we've seen some interesting things trying to be run through a business to help lower paying the tax man.
So when you say cars, like a car just isn't our...
I'm talking Ferraris. I'm talking, high-end luxury cars. And the best thing we always get is, "Hey, I Googled this. I think I can take this right off." So Google becomes our worst enemy.
Or now TikTok. Like I saw it on TikTok. The TikTok person said.
As a fan of TikTok, yes, there is a lot of misinformation that we always have to clear up. And by the way, we have clients who listen to TikTok and then they come to us after the fact.
Oh, do we say yes? And okay, so talk about real quick trips. Like if I'm planning an elite recruiter mastermind event in Paris, France, is that a write-off?
So typically what happens is it's not only you traveling, it's you and the family.
Yeah.
So in theory, if you are traveling for business and there is this elite recruiting forum in Paris, typically we can take the deductions for you, for your travel, your hotels, your airfare. But again, you should not be wrapping into that the family expenses as well. Not that I've never seen that. I'm not saying, but I could have.
Never, ever, ever.
But it never happens.
All right. So anyways, let's talk about what's important for the recruiters. If you are a recruiting agency that is actually growing right now, what are some of the things that you need to be aware of when it comes to the wonderful world of finance, accounting, and the tax man?
So for me, the boring topic, but is important, is compliance. So I would say 75% of the recruiting firms that we onboard are not in compliance with their taxes. And I'm here to say it is not difficult and it is not that much more costly to be compliant.
Okay, real quick, what does compliant actually mean? It's a big word.
Where are you filing? Where did your transaction take place? One of the best quotes I ever got is, I have a large Australian staffing client. And the best comment I ever heard is, why the heck are you called the United States of America? Because there's nothing united, because every state operates like its own country. So every state has all its different rules. And in the recruiting world, the general thought is, all right, I placed someone in New Jersey, New York, Pennsylvania. I'm located here in North Carolina. I don't have any taxes. I did the work here in North Carolina and I have no filing responsibility. The reality is, you need to understand two things. Where's your customer located and where is the employee located? So if you're a recruiter and you are crossing state lines, or you have a remote employee, so over the past couple of years, we're seeing a lot more remote employees, which, by the way, expands your opportunity to get really good talent. But that may open up some additional filing requirements in those states.
So, okay, let me take a few steps back. So I'm sitting here in Virginia, the Northern Virginia. Richmond is now part of Northern Virginia. And I make a placement, a direct placement, DPF for somebody that's either in New York or California. I did all the work. They're not my employee. Do I have to be worried about compliance with those two states?
The answer is yes. And here's why. Your way of presenting this is the cost of performance. So typically, where did you perform the task? You performed it in Richmond, and you would assume, okay, I performed the work here. I have no liability. So some of the blue states actually said, you know what, we're missing out revenue. So there is another method called the market approach, which means, who is the actual beneficiary of that placement? So if the company is located in New York that you're placing someone to, you could have a filing responsibility in that state. And the caveat I give on every presentation I do is, every situation is different. Every state is different. So the key thing is, when you're working with your accountants at year end from a filing, two key pieces of information is, where are your employees located? Where are your customers located? And you may have a filing responsibility.
Okay, so if I am a focus just directly on retained search, direct placement, contingency, is there any other states that I have to be thinking about outside of New York?
Yes, so there's a handful. The obvious ones are California, Illinois, New York, New Jersey, Massachusetts, and Connecticut. But more states are looking at this alternative approach because there's this word out there you may have heard of called nexus. Nexus is the glue that would potentially mean you have to file in that state. So put it this way, Ben, it's gotten so crazy. I have a 20-person state and local tax team just to comply with all the states, because within the states, you could have localities. Ohio, for example, has multiple localities that you could be responsible for. So it sounds daunting, but with the right professionals, we can make that an easier experience. And again, compliance isn't expensive, But it could be if you didn't file in a state for a number of years and they catch you and they can come back and assess you.
And okay, let's just say I'm listening to this podcast episode. I've been placing, direct placement fees, engagement fees in these states, not thinking that I have nothing to do wrong. I'm listening to this and I'm like, oh shit, I can get in trouble. Like, what kind of trouble can I get into?
Well, ultimately, if you are looked at, the states can go back a period of time and basically review, hey, you've been operating in New York for 3 or 4 years. We're going to go back and potentially assess you for that. Now, remember, if you live in Virginia, ultimately you're paying taxes to Virginia and you get credits for taxes you pay to other states. So in theory, you'd have to file in New York, but you would get some of the Virginia taxes back because you should have reported income. So that's why I say the compliance side, it's just much easier to comply because I can't say this enough. It's not that big of a cost.
Okay.
To comply.
And fast forward. Okay. Now we have a few employees, we're a remote team. We're not even talking about contractors yet. Remote team working across multiple states. As an owner, when it comes to finances and accounting, how concerned should I be?
Well, on an employee side, so good news, you have a payroll company, so you're going to be in compliance for payroll and payroll taxes. If you have employees in other states, it's less of a potential issue than sales, but we do need to know, are there employees in certain states? What are they doing? And again, that employee in a state could just mean you have to allocate a certain amount of your income over there. I would say the bigger issue are sales. So if you have sales in different states, that's going to be a key indicator. There's what's called a 3-factor formula. Do you have to file in a state? It's revenues, it's payroll, and if you own any real estate or rent any real estate in a state. Those are usually the 3 factors that every state looks at that could create a filing requirement. Could.
Now let's talk about the staffing side of the house. Like, if you're not using an EOR and you're doing everything like in-house or not using a factoring company, when it comes to accounting, is there things that I should be like really thinking about, or is there things that I should be getting prepared for?
Well, if you're getting into that side of it where you're now doing temp staffing, what's interesting with new business owners is understanding gross margin versus markup. So it's amazing how many recruiters I've met where we sit and we talk about markup versus gross margin, and most people think it's the same when it's not. So now you're getting into a little more complicated where you have to understand your costs so you can determine what the appropriate markup is. So this is where we excel. This is the fun stuff because every state has different tax rates. You have to worry about certain states. And for example, in New Jersey, you have a client in Newark, there's a 1% city tax. So that's why you need to have internally or externally the right people who can cost out that employee so you're marking it up correctly.
Have you seen a lot of people make mistakes there?
All the time.
And how bad are those mistakes?
So here's the recruiter mindset, and this is a great example. We onboarded a client years ago, and listen, if you can close a $4 million deal, you're going to close a $4 million deal. It's pretty impressive. This particular client was not very profitable. We spent hours showing him that your markup needed to be this. We shake hands. Thank you so much. A week later, he calls me and says, hey, I can close this $4 million deal, and the markup is less than what we came up with for him to be profitable, right? Because you're attracted to the revenues. One of the greatest lines a staffing client said to me is, revenues are for your vanity, net income is for your sanity. So that is the best line. So don't get caught up in your vanity. If you're not making money and you're increasing your revenues, you're increasing your exposure to a lot of issues. So focus on your bottom line.
Okay, real quick, that line one more time.
Revenues are for your vanity. Net income is for your sanity.
I love that. Okay, so here's another thing a lot of recruiters do. I see this in the groups all the time. I'm looking at expanding my recruiting team, but I'm only going to hire somebody on a 1099 basis. You just laughed at me.
I'm going to cringe.
You're listening to this. He actually just started laughing at me. I see this all the time. Should people be worried about expanding their team, whether sales or recruiting wise, just doing a 1099?
Okay, so 1099s, as each year passes, Ben, becomes a higher priority for the federal government and the states. There is very few instances, and I can't think of any, where a recruiting firm can bring on Michael as a recruiter and pay me by 1099. And here's where it gets exponentially worse if you get caught. So use round numbers. You bring me on and you pay me $100,000 as a recruiter. You win the audit lottery, right? The lottery no one ever wants to win. The IRS will come in and assess you what's called the FICA and Medicare taxes, both as employer and employee, because you didn't do it correctly. So that's 15.3%. So you're like, all right, it cost me 15 grand. But the IRS is going to assess you the federal withholding of 25% that should have been withheld from an employee. So you're looking at a 43% tax plus probably another 10 to 15% in penalties and interest. And remember, payroll liabilities cannot be removed from bankruptcy. That's the one liability that follows you forever. So if you're a recruiter and you were thinking about a 1099, I would urge you, there are very few instances. One of the few instances there are two. If you're an IT firm and you're typically what we call corp to corp, I'm an IT staffing firm and I'm bringing in other companies, retaining them to perform the service. They're an LLC, they're an S corp, you can issue a 1099. The only other field is what's called locum. You're placing doctors. Doctors, you can issue 1099s. But to answer your question, Ben, if you're issuing 1099s to recruiters, internal employees, it's 99% chance it's wrong.
Even if, like you just talked about, like, they spun up their own LLC, it's still wrong.
Yeah. So what we see all the time is Ben's going to form his own LLC, right? And you're going to be a single member LLC and you're going to work for me. The exposure this is the test for the IRS. They're going to look up your company. They're going to see if you're advertising or you're offering your service to anyone else. And if you're working 100% just for me, they could reclassify you as an employee.
Ooh. Has the government come in staffing companies and done that?
What they do is they enforce through fear. So basically what's happening, the penalties keep increasing. I'll give you a real world. In New Jersey has came out, I think it was 2 or 3 years ago. In addition to a reclassification to an employee, it's a $10,000 fine per misclassification. So if you have 5 employees that you misclassified, that's 50 grand. Are the audits out there? I haven't seen many of them, but to me, the exposure is so great, I wouldn't even consider it.
We just talked about how I've seen a lot of recruiters try to 1099 other recruiters to grow their company. But I see a lot of people when they start off on the actual staffing side of the house and they don't use factoring, don't use EOR, they try putting all those contractors in as 1099s. Are you running into the same issues you literally just spoke about?
Less and less. As time is passing, I think there's been so much fear garnered because of all the publications coming out. We're seeing less and less. And the reality for us is I wouldn't even onboard a new client if we see there is rampant 1099. It's not worth it.
You just they come knocking on the door and you tell them?
We tell them no, because here's what human nature is. They get caught, they owe hundreds of thousands of dollars, then they say my professional never told me. So we at this point, because the exposure is so great, all kidding aside, I will not onboard a firm that is incorrectly classifying. Now you have 1 or 2, I get it. We can look at it and say, all right, maybe this one, it is an LLC. It seems like, they are offering their services to other companies. But if I have a new client, they have 5 recruiters and they're all 1099, I am not onboarding them.
Okay, so we've talked about compliance, 1099s. I'm kind of curious when we talk about to look at the financials. We're looking at the big picture of the financials of a recruiting business. Are there some things that we should really be focusing on outside of income and revenue? Talk about that a little bit. You are the expert.
Yeah, so I know this year our executive recruiting firms had a down year, and I'm talking generally. So we had some that were up, but in general, it's a down year. What we've seen happened over the last couple of years is as times are good, we tend to spend more money, incur more costs. The good business owners are constantly looking at their profit and loss statement and making adjustments as the market is either going up or coming down. So for executive recruiters, it's not rocket science, right? Your financials, you have your fees, you have your expenses. The question is always, what is your internal employee expense for payroll? During the good times, did we have too many internal employees that we need to refocus on our costs? So we've seen this year a lot more attention spent on costs. How do we reduce costs? There's more optimism for next year in 2025. I think collectively, regardless of politics, everyone's glad the election's over, meaning that the tax code isn't changing, right? So you don't have to worry about 25, 26, any major change in taxes. So that's great. And I think a lot of our clients are just waiting to see how this first quarter shakes out.
Okay. Moving forward to this is there any tools that a recruiter, a firm owner should be looking at to kind of prepare for all this tax planning stuff?
Yeah, the easiest tool, and it's a program so widely used, is QuickBooks. QuickBooks, and I'll give you a real world example in the recruiting world. So you have multiple owners, and usually when you have multiple owners, the way you're allocating income is based on production, right? So QuickBooks is great because it'll manage your income and expenses. You get a multi-year snapshot so you can see instantly how did you do this same month last year, this quarter. But also I can create individual profit and losses for each recruiter. So yeah, it's fantastic. It's an easy tool. What's great with QuickBooks Online, me as the accountant, I have access to your QuickBooks so I can look at it with you at any point in time. So it's a great tool if you're not using some type of accounting program to manage the business, then you're managing your business blind.
Okay. We're going to switch gears a little bit. I've had my firm for like 7-8 years. I've grown it to XYZ revenue. I want to sell. What's your thoughts on selling a recruiting company?
So now you speak my language. So we do a lot of M&A, and I think there's something everyone has to understand. In an executive recruiting firm versus a temp staffing firm, two different values.
Okay.
So I'll give you real world. In 2022, I presented at a group called Pinnacle. If you're familiar with Pinnacle, it's an executive recruiting organization. And in October of 2022, if you asked me that question, and you're probably going to wince a little bit when I tell you this. So back then, firms were selling for 1.5 to 2 times gross revenue. Okay. That's in October of 2022. Today, it's back to what I would call traditional values, which is anywhere from 0.75 to 1 times revenues.
Okay, so I've been building this, and we're going to stay on the executive search side of the house for a while. I've been building this retained firm. I've been building this exec search firm for a while. I do almost all direct placement. And we'll talk about getting into temp in a bit. I'm pulling millions of dollars a year revenue with my team. It's only if I go try to sell it and walk away, it's only worth 0.75%.
0.75, 1.25. So you have to think about it as, hey, if I'm making all this money and I sell my company, it's basically a prepayment of what I'm making for 2 or 3 years, whatever that time period is. Is it really time to sell? Because what am I really getting? But I think what everyone has to understand is what makes you more valuable, right? Why would, one executive recruiting firm be a 0.75? Why would another one be 1.25? And there's a lot of things you're looking at. It's customer frequency. How many times are your customers using your services, candidate pool, your processes? And, right now in the recruiting staffing industry, it's people, process, technology. That's every convention I've attended, which was 8 of them this year, is people, process, and technology. So how are you and your recruiters leveraging technology? How are recruiters embracing technology and not afraid of it replacing them? And that's where my larger executive search firms are really trying to leverage that technology so recruiters can do less admin and more of the recruiting. So it's layering in the right technology.
So you do a lot of M&As, and this is going to sound like a dumb question. If I'm deciding to sell, like, what do I freaking do? Just like go talk to you? Do I go talk to sellers? Where do I even go if I want to?
Here's what I tell everyone. And I am a big proponent that everyone should be attending some of these national conferences. 2 reasons. A, what's going on in the industry? You get to talk to your peers. And trust me, at night when you're at a bar with a few adult beverages, you get great conversations talking to your peers. You get a lot more, I would say, honesty on performance, but it allows you to network. So, for example, we are an accounting firm. I've got 220 staffing clients. But guess what? I work with a whole host of executive recruiting staffing firm experts, insurance lenders, attorneys. That is the pool of people that you go to. So I get calls once a week from referral sources, from people I've met. Hey, I'm thinking of selling. Hey, I'm thinking of buying. And if you're selling, you got to be prepared for the first time someone to come in and say your business is not that great.
Well, there goes my ego.
Absolutely. What do they want to do? They want to lower the price. So the first thing they're going to tell you is, by the way, you're not that great.
Well, okay. So before we're talking about getting into in a temp, I have a temp business and I'm looking at selling. And we're going to go 2 different ways. If I want to talk about having pretty much your entire temp business run through an EOR or a factoring company.
Yeah.
And then you have everything in-house. Is there valuation differences between the 2?
So possibly, because when you're selling a traditional staffing firm, so executive recruiting is actually a little easier. It's based on revenues.
Oh, hey, so real quick. Yeah. Executive search firm is easier to sell.
Revenues. It's easier to value because if your revenues are, 5 million and you're consistently at that amount, it's a percentage of revenues, 0.751 area. Easy, right?
Fair.
On the temp side, everything is based on what we call EBITDA, earnings before income taxes depreciation. So it's a net income approach versus your gross revenues. So you asked earlier about putting expenses through a business, what's deductible. So now when you're selling a business based on your net income, we now have to what we call scrub your expenses. What were personal in nature, because we need to get your income as high as possible. So when you're selling a temp firm, it's a lot more labor intensive. It's a lot more work because we need to make you as I say, the shining star of the industry to get you the highest multiple. Number 2, every sector has a different multiple. Light industrial is about a 4 multiple. Professional services could be, in the 5, maybe 5.5, 6 range. Healthcare took a major dive in the last 2 years. 2 years ago, you had a healthcare firm, you were selling 8 or 9. Now you're selling 5.5, 6.5. So the beauty of working with professionals that know what they're doing and have that industry expertise is you have that information readily available. Hey, I'm thinking of selling. I've got a temp site. I'm doing light industrial. You mean to tell me I can only get a 3.5, 4 multiple? Is it even worth it? So that's where, having the right people around you can give you that information.
Okay, this is going to sound super stupid. If I'm sitting there having a conversation with you and you tell me my valuation sucks, even though my ego's great because I've spent my entire life, blood, sweat, and energy into this time period, and you said, I'm not going to get that much money out of this, do you ever recommend anybody to get an operator put in place instead of you?
So yeah, that comes, especially in family businesses. Family businesses tend to be more dysfunctional. So you talk about therapy, work with a family business. So ultimately, it's real simple. I always say the business is the golden goose, right? That's what's feeding everyone. That's what's making money. What do we do to feed that golden goose to make it grow? So if it's not the time to sell, and by the way, 2024 in the light industrial market is tough. You're selling at a low. So the next question is, what do I do to grow back wealth and value, right? How do I get that back? Well, everything goes to sales and recruiting. So what are you doing on the temp side for sales and recruiting to grow your head count? Because on the temporary side, it's all about head count, right? If I'm at 100, 50 a week, how am I going to get to 60, 70, and so on? And anyone buying you wants to see you're making that investment into tomorrow.
No, I kind of asked this a while back, but If I've built out a staffing company through factoring or using an EOR, can I actually still sell it?
That's how most are being run. So think about using a factoring or an EOR. So in EOR, there's pros and cons. EOR takes a lot of that off your plate, but there's a cost because you got to pay a fee. So that's going to lower your margins, right? So when you're using an EOR or PEO, your margins may come down, which will affect your EBITDA. And remember, your EBITDA is a multiple. So if your EBITDA drops $100,000 and you're selling at a 5 multiple, that's a $500,000 loss of potential value, right? And factoring, believe it or not, you're just incurring an interest expense, and interest expense is excluded from your income number. So if you're borrowing to pay your weekly payroll and you're incurring that interest expense, that is not included in your EBITDA. So it won't impact your valuation.
Huh. Awesome. Okay. So
little nuances.
I know this is why we have you on the podcast. Okay. So I'm running an exec search firm, running a few $1 million a year, and I'm sitting there listening to this episode, and I'm like, God damn it, I can't freaking sell my company. Is it worth getting into the temp side of the house?
An executive search firm, you're doing really well, right? In these years, you're doing really well. It's much simpler, right? Getting into the temp side requires now potentially different recruiters, different accounting systems, because now QuickBooks, right, is not the right tool for temp side. On the temp side, you may want to bring in different software. You know, one of the big companies out there now is Aviante. So what they do is, you know, when you pay Ben on a weekly basis $20 an hour and our markup is 24, this software allows you, your billing will be instant as soon as you do payroll, because it would all be based off payroll, your markups. So you want to go into a more sophisticated, then you need an applicant tracking system. You need a front end on the ATS. You need a back end from the accountant. With that said, from a value proposition, from a building wealth in a company, the temp side is where you're going to get a lot larger sale number.
So looking at those larger sale numbers, how quick have you seen somebody actually build and sell a temp side?
I'm going to give you the best example. Every recruiter I meet who's starting their own business, I shouldn't say every, many will say, Michael, I'm going to build this out in 5 or 6 years, sell it and make a lot of money. And I just laugh. So
wait, pause there. You hear that and internally you laugh at that.
I do, because it's a tough, it's a tough business. It is very difficult, and you can have some small wins, but when you become a business owner and now you're managing people, employees, customers, vendors, it can beat the heck out of you, as you know. So the best example, 2017, I met these two women. They had a California-based healthcare company, 0 revenues. Met them, told me, Michael, 6 years, growing it and flipping it. And I smiled and I said, that's great. And after working with them for a year or two, I'm like, they're special. They are great operators. And in 5 years, they built it from 0 to 50 million in revenues and sold the company for, I think it was 60 or 70 million dollars.
That is awesome.
And to this day, they remain clients. And I think we spoke earlier is the next step, you become a recruiter, you start your own business. It's people, process, technology. It's people, process, and managing. But the process side, I think, is key in order to expand so you have consistency in what's being done.
Okay, so actually, let's talk about that. You know, so often, I think the life cycle of an agency recruiter is get in, learn the skill set, do great, crush it. And then your boss yells at you one time and says like, hey, you can't take the vacation as promised. And I'm like, but what if you're the top biller? Who cares? You need to bill more. And then they're like, screw it. I can do this on my own. If I'm that recruiter that's hit that point where I can do this on my own, what do I need to do to prepare from all this financial big stuff that you're talking about to jump out on my own?
You really do need to find an accountant who can help you set up the firm, because here's what you have to think about. Am I doing it on my own, or am I going to have a partner? Big difference. If you're doing it on your own, you do it the way you want, you grow, you figure it out. But if you're going to have a partner, so let's just say, Ben, you and I, we want to leave and do this together. Now you get into legal issues. There's something called an operating agreement. The operating agreement will spell out our partnership, what you get, what I get. The best term I've heard, it's our prenuptial agreement in case we ever get divorced. You have a written document, so there's less fighting. And a lot of it is, how do we split income? Is it 50-50? Is it based on production? What perks do we put through the business? So when you're going into business with a partner, it adds a whole new dynamic. You need an attorney. I know we all hate attorneys, but we need a good one. And you need to have the right accounting professional, the right attorney to set it up correctly, which is so important.
Okay. So we've covered a lot. And I feel like if we were sitting down for a glass of wine, I feel like we could probably spend another like 3 hours going deeper on all these subjects. But because we're going to run out of time, making sure this doesn't turn into a 5-hour podcast that I would actually enjoy, that most people probably wouldn't. We covered a lot. Is there anything that you want to go deeper in any of the topics we covered?
I think the best advice you asked earlier is a client of mine. He always said to me, don't overthink it, right? Because you'll never do it. But if you are going to do it, make sure you're supported by those professionals that can help you succeed. And your professionals should allow you to run and manage the business. And your professionals should be guiding you on legal compliance, right? You shouldn't be figuring that on your own. If you're a recruiter who started your own business and you're trying to figure it out on your own, that means you're spending less time recruiting, making money, and more time trying to figure it out.
Right there. So we're going to jump over to the quickfire questions. And we're going to mix it up a little bit because, you're technically you're not a recruiter, but you know a lot of recruiters.
I'll do my best.
Well, okay. So you talked to hundreds of staffing firm owners. What stands out to you about the great ones that you've worked with?
It's leadership. It's you as the business owner have to lead by example. And it's the management of people. I think the biggest hurdle going from employee to owner is it's not about you anymore. It's about everyone else working together and producing, which will then make it about you. It's really the leadership and understanding you're not a solo shop anymore. You're not a solo recruiter. You're now, incurring additional, there's a lot more when you go out on your own. And you need all of your recruiters and employees to understand what the goal, the mission is, the process, and the outcome. Compensation, we work a lot with executive recruiters and certain commission structures. How are your other clients doing it? Just make sure it's transparent. You went through your career transparent, comp. Don't make it difficult for anyone because that's when it creates problems.
Okay, so all the hundreds of companies you've worked with, other hundreds that you've advised, have you seen like a recurring issue or something that has stopped firms from growing?
Yes, the business owner holds everything too tight and will not delegate. If you don't delegate and you don't give other individuals responsibility, you're never going to grow. You can only grow as much as you can hold on to what you have. So you have to learn to trust your key management, trust the process, step in when needed, but you cannot hold on to everything because you will never grow.
Has there been like a company or two that you sat down with and you're like, this person's different, this company's exceptional? And was there something that stood out about those?
The beauty of what we do, I've worked with hundreds of business owners, and you can tell pretty quickly which owners that will become successful and which ones will not. And it is a mindset. It's who's listening and who's willing to make changes. A lot of business owners are stuck in their way. Those successful business owners adapt, right? Whatever it is, they adapt, they make changes, and they move on. And the faster you can adapt and change, the more successful you'll be.
So I'm sure you're probably looking at all the fun stuff, the back end, QuickBooks, and all the other software of all these staffing firms that are growing and doing great. Has there been like a tech tool that you have seen that kind of stands out in those statements or that has been helping some of these companies grow?
On the executive recruiting side, from an accounting measurement, QuickBooks is fantastic. It works. It's great. You don't need much more than that. On the temp side, every convention right now, Ben, is AI, technology. So what we're seeing is on the reporting side, more of these, again, there's TempWorks, there's Aviante, there's so many of them. They're now incorporating AI into their reporting, which is only enhancing. So the information is valuable. On the temp side, you want to know your top customers, revenues by customer, gross margin, head count, and all those tools are there, and you're able to put it in a dashboard now. So a lot of us business owners have ADD, myself included, where, you want everything quick. And that's the beauty of what's happening now. You can get these dashboards getting you the information you need to make decisions.
Dashboards. Superpower of 2025. Has there been a book that has actually had a huge impact on your own personal career?
So for me, because I work with so many business owners, so many different industries, and the interesting thing is I have 15 clients in light industrial or 15 executive recruiters. Everyone's different. So Jim Collins is an author who had 3 books. Good to Great. I had to write it down because I forgot them. It's been so long, but it's Good to Great. Then the second one was Built to Last. And the third one was How the Mighty Fall. Those 3 books I recommend because it'll take, for me, showing my age, Nike versus Reebok in the 80s. And what did Nike, they sell the same darn thing, but what did Nike do to become the preeminent powerhouse? And it really gets into the mindset of the decision makers. And then Built to Last, how do you sustain it? And then how do you get complacent and fall? So to me, those 3 books cover the entire cycle.
And real quick, you look like a young guy, so I don't know what you said about age. Well, okay. So because you're a therapist also, and you're like, you see the numbers, you see like the actual data, but you're sitting there having these conversations. And I'm sure some of it over the last year or two, like some of these firm owners are calling you like, shit just stinks right now. How have you seen some of them get out of a funk?
It's interesting. And I think that comes with age. I think as you become older and wiser, you realize you need to find an outlet to get away from the everyday work because you can't clear your mind. So listen, for my clients, whether it's golf, whether it's sports, whatever it may be, it's that ability to clear your head. And if you ever worked with a business coach, I did for a while, I tried it out, and it's all about clearing your mind. And I think the best thing a client said to me, think of us as an athlete. The business owner who gets over their mistake the fastest becomes more successful. That business owner that holds on to that mistake, you're preventing yourself from moving forward. And I thought that was great.
This is going to be a fun one. So looking back in time, if you got a chance to sit down with yourself early on when you first started working with like recruiting companies and staffing firms, because you're giving them advice. If you could give yourself advice during that point in time, way back when, now with everything that you learned, what advice would you give yourself?
So I give this advice. I have 2 daughters. I've got a 21-year-old and 17-year-old. And I think what was never taught to any of us is how to manage people. I think when you learn how to manage people, manage potentially to the desired outcome, thinking ahead, I think it's a tool, and I watch it with my young staff. I watch it with my young business owners. It's the art of managing people. I wish I knew that earlier on.
That's good. And a quick book question before we wrap up this podcast. Have you ever read The Psychology of Money?
I have not.
Oh, add it to your list.
I'm going to add it to my list. Thank you.
Well, okay. So because of all the conversations you have, the clients that you say yes to, I'll work with you. The clients that say you look down at everything, you're like, you are a horrible person and you are going to be a huge liability for me. I'm sure you get asked from recruiters and firm owners constantly, tons of questions. Is there a question that you wish they would actually ask you but never really do? And what would be that answer?
From my perspective, it's interesting. It's all about how much money you make. Everything starts with a sale, right? I had a client tell me when I was in my 20s, everything else is irrelevant unless you sell, right? Which I agree with. Without selling, there's nothing else to worry about. And I think that the question is, as you're growing the business, you start on your own, it's all about profitability. How do we get more profitable? What do your other clients do? Like, it's simple, right? At the end of the day, your business should do 2 things for you: earn income, which is your pay, your drop, but create wealth, which is what we talked about on the sales side. So what do we do with that business to create more income? And then the other thing is, how do you create that wealth? And creating that wealth is you have to grow. That's the only way you increase that wealth.
You just mentioned something about creating wealth. There's a lot of recruiting firms that are lifestyle companies.
Absolutely. And that's okay.
Okay. I was wondering asking that.
It's all, what does the business owner want? And there's absolutely nothing wrong with a lifestyle business. If that's what you want and you're enjoying it, then just understand that the value on exit won't be the same. So when you exit the company, typically that lifestyle business is going to be a lot less value, but that's okay.
Can I exit a recruiting podcast?
We'll see where it's worth. Yeah.
Well, anyways, before I let you go, if somebody wants to follow you, what's the best way to do that?
So yeah, LinkedIn is the best way. I wish I was better with social media, but LinkedIn, I'm at Citron Cooperman. That's the firm. You can always find me there. So those would be the best places.
Okay. And we covered a lot. We talked about a lot of different things. Everything from, starting your business to growing your business to valuation of business to selling your business. Is there anything that you want to share or leave with the listeners before I let you go?
All I can say is this year, and I think you said earlier, was a choppy year. Stay focused, stay in the game, get involved with the industry. And I'll leave you with this. Everything is technology right now. And I think for I would say us older business owners, you have to make sure that you are staying in touch with the technology changes. And you want to have someone within your organization who is on top of that. Because I think we're headed for a tremendous change in the next 5 years.
Ooh, so true on that. Well, Michael, I just want to say thank you much for coming on.
You're welcome. I appreciate you having me.
One of the things that we are always going to have to face in life, especially if you're listening to this and you're an American, is the tax man. So thank you for, I hate to say this, enlightening, scaring us, showing us some of the things that we need to be prepared for and need to be doing, like compliance again. I truly believe 2025 is going to be the year of abundance. It is going to be a start of the wealthy recruiters out there. So let's go make that happen. Let's go and make 2025 the year that counts for you. So thank you for listening.
Thank you.